Crazy day in the markets. Basically, everything had that big pullback in here overall. Basically, just overall big high level view. End of the day, 582.86 down from our highs around 592.58 from earlier in the day. And now we're going to go to the 30-minute chart and then we're going to go to the 15 here just so you can kind of see what happened in here on the day. So a 30-minute, you see this move right here. So 10:30 to about 11 o'clock, going into 11:30. This move really shouldn't have happened, right? So this first candle, you can see not a whole lot of volume. This one, you had a little bit more volume. Then we get stagnant up here, right? So we broke pre-market highs on some low volume, then kind of just placed a couple dojis here on the 30-minute. Could never break this 592 60. I mean, basically it's that 592.65, 592.70 area from those highs in here from pre or post market yesterday. Just could never get above that. And we're going to go to the 50-minute here because you can see where your volume actually was. And really, this first candle here where you had that pop, there wasn't a whole lot of volume. So this move right here was interesting. And then this one, I guess everybody just kind of jumped on the bandwagon. They go, oh, okay, I guess we are going to rise today. Then they did. And then everybody just kind of got spooked out of here, right? And then obviously, once you consolidate too long up here, and especially on that low volume, as you can see, something's about to give. You had a little bit of a down move here, and then this 15-minute candle, and then obviously this one just a huge down move in here overall. So what are we looking at in here going forward? Well, basically, we mentioned in the past, if we can get above that high 596, 597 range, we're going to be range bound up in here to about that 608 level. So right around a $10 channel in here is where we're going to be if we end up reaching and holding that 597. Obviously, we haven't done that yet in here on the week. And we're kind of in this weird area here where we have these highs in here, this resistance of that upper 596. And then we have a support in here, 577, 578. But really on the daily, the 200 SMA is going to hold more weight probably. So if we do come down to that 577, 578, we're probably going to overshoot it. And this 200 days is going to save us. That 200 days currently trading at 575. So wherever we end up here in a couple days, if we do end up pulling back, that 200 SMA is going to save us. But if not, our next area of concern is this right here, a little gap down here to that 566 area. So 565, 566 area on the daily chart. That is where we're going to be needing to gap down and fill if we do end up breaking that 200-day SMA. If we back all the way out here to the weekly chart again, you can kind of see this overall channel that we have created in here. And really, we're kind of in no man's land on the weekly. We could get saved down here by this 9-day EMA, which is kind of right where that gap needs to be filled at. But still, everything still kind of remains the same as far as the daily and the weekly chart. $10 channel up here. You can just kind of see an overall big picture of how this move from early April until now has kind of played out. So a big pullback in here is healthy. But I don't know how much more of a pullback we're going to get because especially with our RSI that was trading so high up here for the past week, a nice little reset in here is nice. So your options flow in here today, overall, it leaned bearish. Your put call ratio is 1.7. You have 10.3 million puts versus 6.1 calls in the open interest. Out of the money puts basically just destroyed the May 21st expiry, which was today, right? So you about 106 versus 216,000 out of the money calls, right? So those puts just destroyed them. Open interest climb 1.2%. And then basically we closed down 1.6769% because everybody got spooked with the surge in the treasury yields overall. And basically just that overall debt kind of spooked the market. So speaking of that, we're going to go to bonds. So we would say overall that the bonds trade inversely. So therefore we get a pullback in the market, then that means that we're going to get a surge in the overall bond market, or the bond market, that is. I'm sorry. But that is not what happened today. So this is something that we have to be kind of concerned with here. On the daily chart, TLT, we are down below our 0% fib level that we had here. So 84, 89 is currently going to be our first resistance. Anything below that, we're looking at nice whole numbers on the way down, 80, 75. And we're going to see where we end up here. But we did pull back here overall on the day on some volume as well. But our RSI is pretty much overbought in here. So this is going to be a question. Is the bonds going to continue to trade with the market, or are we going to start going back trading inversely? So we always talk about they trade inversely, but they always have that positive drift like the market does. or I'm sorry, trades with positive drift as it correlates to the market, right? But overall, it basically trades inversely. So this is an area of concern for us. Does this mean that there is more to come here as far as a down move? Or is that 577, 578 going to be in play? Is that gap fill on the daily and weekly charts and spiders going to be in play? That's the question here. So far, this is telling us yes, but we don't know overall what will happen tomorrow. I mean, it's basically a coin flip at this point, right? We can kind of say everything is overbought in the market and needed a pullback that's going to be healthy. The problem is, how fast are we going to come back down and revert to that mean? How long are we going to stay there? And then what are the bonds going to do? We're going to start pushing this higher and start trading inversely. That would be a sign of a healthy market, or are we just going to kind of stay down here and keep on pulling back with the market? That's going to be the overall question in here. Now, if we go to our IV rank here for our SPY, your IV rank is 24. Obviously, volatility kicked in here. You get a little bit of juice off of that big midday move in here. And it looks like you have right around a $5 expected move priced in by tomorrow, the following day, right around a $7 expected move. Next Friday, if you go all the way out to 5:30, right around a $13 expected move is what everybody is pricing in here. So again, this is going to be interesting to see how this plays out. Keep an eye on the bonds as compared and how it correlates to the overall market. If you just want to chalk it up to SPY and TLT, like I just did here, that's completely fine. But just kind of keep in mind that we're always looking for an inverse trading correlation, right, between the two with a little bit of positive drift in our bonds. But right now, today, pulled back overall. So this is going to be an area of concern for us as we're in here going forward. But again, 597 still the level up here. We're still looking at 577, 578 in here. Gap fill down here, 566. That is what we're looking at on your spiders. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.